Mike Tedeschi, Portfolio Manager over at Perspective Wealth Planning. In this video, I want to take an in-depth look at the S&P 500. I want to take a look at the short-term key levels that we're watching this week, and I'll also touch base on the US dollar as well. Now, we've got the daily chart of the S&P 500 on the screen, and the area that we were watching for most of the year was 4,100 after we had that push down in February. This is the area that held. We got our bounce, it held again, and then we pushed higher. We broke down below that a week or so ago, and that's where we had that big push to the downside. And now we've kind of rallied back up, and we're basically testing the underside of that 4,100 level. This is going to be a major battleground that's going to take place right here. The winner of this is going to determine that next move. Because as it sits right now, we broke down and we're testing something from the underside. That can lead to that continued push to the downside if we can't get over it. And if we are able to get over it, our next key level comes from post-Fed meeting, where we rallied right up here into this 4,300 zone the first day, and then we had our hangover the next day. This is big resistance in on the upside, and that's the other level that we're watching. On the downside, our major level of support is now that 3,850 level. All right, it came as an importance back here in March of last year, and that is where we found a temporary bottom this year. Now I want to zoom in and look at this in on an hourly time frame so that we can really take a closer look at these levels here. Over the last couple of weeks, you can very clearly see 4,300 acting as major resistance. That big rally post Fed meeting, we could not get over it, traded just underneath of it, and then opened back up and pushed to the downside. On the bottom end, our resistance level isn't exactly 4,100 when you look at it in an hourly time frame. It's this zone that goes from about 40.75 up to that 4,100 zone, and that is where we are at today. When we had our push to the downside last Thursday, we had our strong rally in on Friday. Monday, we traded in a tight range, and then overnight, we've broken to the upside. But we have not broken back up over that 4,100 level. So the key that we're watching right here is this 4,100 zone. A move back up above it puts us back in this box where we traded for a few weeks, right? The market moves in boxes, right? We have a box here, we break down, we have a lower box that we're trading in. If we can get back into this box, that opens that 4,300 level back up. And above that, we even have another box, which you can very clearly see here. This is where we traded for a few weeks, and that's about that 4,500 level. So about 200 points above. So we have a 200-point box between 4,500 and 4,300. We have a 200-point box between 4,300 and 4,100. And then we have a little bit bigger than a 200-point box because we had that washout bottom. Okay, if you ignore that last capitulatory flush on Thursday, it's again about a 200-point box. And those are the ranges that we've been trading in here over the last month and a half or so. And so that's what we are definitely watching here in on the short term. Now I want to talk about the US dollar because I think this is a very, very important zone. All right, I'm going to back this chart up on a monthly time frame to begin with. All right, we go all the way back to 2001 on this portion of the chart here. We are making 20-year highs. The last time that we traded over that 104 zone was 2002, 2003 in that zone. We pushed up above this level, and we have started to reverse. This monthly candle right now looks like a potential doji after this huge run-up. All right, that is a potential reversal candle. Now, candlestick patterns, you got to have confirmation on the next candle, and this month hasn't even closed. We still have about half the month left, so this is plenty of time to change. But if we look at it on a daily time frame, this is starting to look like a potential false breakout. All right, we had that final push there over that 104 zone, big thrust, and then 3 days right back into this range. All right, the important zone really comes right down to this 101. So if we ignore the spike during the height of the pandemic fear in the market, which pushed us from 101 to 102, and we look at the resistance zone that was in play after that while the market was trying to digest it, it's that 101 to 99 zone. All right, this, and we traded in this zone, the 97 to 99 zone, for a couple of weeks before making our breakout and continuing to push. 101 is where the dollar bulls need to hold. All right, if we hold there, you can kind of look at this as the breakout and the back test of this important key zone, and then the next direction, we're either going back down towards that 97, or you can get that push back up towards those highs. A really, really strong hold would be holding this 102.5, right? So holding this zone. So a little push up, and then we get basically a pop and what's called a squat back into the range, and then you watch whether it can break over 104 or underneath 102. The reason why this is really, really important, remember, all the commodities are priced in US dollar. The weaker US dollar is going to be a tailwind for commodities. A stronger US dollar is going to be a headwind. We've especially seen that play out in the gold and precious metals space. As the dollar has strengthened here over the last month or so, the precious metals have really taken it on the chin, and so we're watching it for that. But the other reason why this is so important is this is that potential false breakout. And when we get a false breakout, a lot of times we get a swift move in the opposite direction. And we could take a look at the Russell 2000 last year in a daily time frame to talk about that. You have a range, we made the breakout, and then immediately fell back underneath. Right? So this is a failed breakout, and then we know what has happened since then. You get a swift move in the opposite direction. So what we're watching here on the US dollar is, can we hold inside this zone, or was this a false breakout? And the price action that takes place here over the next couple of weeks in this space is going to have big implications for many, many different asset classes, and so we are going to pay very, very close attention to what the US dollar does here. As always, I hope you guys found this content useful. If you have any questions, feel free to reach out to me at mtedeschi at Perspective Wealth Planning, or you can give me a call at 814-580-9881. I hope you guys have yourselves a fantastic day. I'll see you all tomorrow. Take care.